So here we are, the Raw Take for CEOs.
Yeah.
It is February 24th, so our last one in February 2021.
Welcome, everyone. This will be a fun one. We have a guest. It's just a guest we've had in the past. He's a really a good friend of the firm, so excited to have him on.
We got Luke Van Every. We're going to be talking about PEOs and how they are changing the landscape and how what Luke's doing.
And this week, it's like my favorite topic, right?
Why is it your favorite topic, Dan?
I won't go there.
Well, but let's talk about what's in the news before we dive into PEOs.
Yeah, so the big news this week, of course, is the PPP Loan 2. There's been an adjustment, an executive order. I'm assuming it came through an executive order. Essentially, the SBA, as of today, is limiting the types of applicants for the second tranche of the PPP. And so for those of you that were able to sneak it in between Monday and last night, which we had one or two customers actually fall into that bucket, congratulations, because the next 2 weeks will be a sort of a waiting game. And of course, here we go again, changing the rules. I got to tell you, a lot of companies, it did take a while to gather the information because unlike the last go around where you used 2019 payroll and financials, you were using, possibly you had the choice of using 2020 payroll.
And on the flip side, the banks were being more conservative about their, I won't call it full underwriting, but their underwriting of these applications compared to the first round. The first round was just about getting money out there as fast as possible. And this round is much more about, are you really eligible? And if so, like I, the bank, want to make sure I document it before I give you the money rather than after.
Although we did see a few instances where the banks were comfortable. I think what really happened was for those companies that changed from using 2019 payroll figures to 2020 payroll figures, that I think that's where that level of scrutiny came in. But yeah, there were a few that the underwriting process just took 2 weeks in some cases. Something we thought we could just, here's another application. And of course, it was, I mean, in our mind, it was like spot on. And, the customer deserved it, the company needed it, and they actually fit the
bill very well. I think it was a good use of free money.
But that said, here we are, 2 weeks. It's going to be sort of, I wonder what sort of fallout is going to come out of this. I frankly, I'm not sure the banks the underwriting teams are bogged down as much as they were, say, 10 months ago. I think this may be a little bit more like window dressing for policymakers, but that's just my 2 cents.
So the Biden's changes are for the next 2 weeks overall, and we won't go into the details, but it'll be more limited, most limited to companies that have fewer than 20 employees to obtain the PPP2 loans. Somewhat ironically, that 2 weeks will probably line up pretty well with the shutdown of the economy last year.
Yeah, and there are other provisions in this, but I would say the 14-day waiting period for companies over 20 employees is the big one. So,
and it's a big red flag for like, will that open back up, or what's going to happen at the end of those 2 weeks, right?
Right.
So no expectations. But we are going on like March 13th. Will be pretty much a full year of since we've really been in this lockdown mode, and as we see the vaccine getting rolled out, long awaited. It's all relative, right? A vaccine in under a year is crazy, fast, but long awaited. Our conversation earlier, Dan, was about kind of the macro versus the micro.
Yeah. And so before we jump into because the economy has obviously come back in a big way. I mean, it's been a raging bull on the stock market, albeit very much a dichotomy in the who's actually driving the values. You are seeing some issues on the micro level. And so with that, next week, we're actually hitting off a 4-week series around some of the cash flow and KPIs. So I would say the next 4 weeks are going to be a little bit more around learnings, how we look at cash, how we like to tell stories through KPIs, how we like to uncover risks and opportunities, and then ultimately help you define your countermeasures. So that's going to be, you're going to start seeing a lot more stuff on our social media and other platforms around cash flow. Cash flow waterfall is going to be one of the big ones we talk about, where you're making and losing money and how to build KPIs, or how to think about KPIs, and if you want to call them scorecards. Some people don't like to call them scorecards anymore, but sort of like, what is my radar? So, but with that said, what we are seeing is, and this is nothing, I mean, it's not like it's been in the last week or two. I would say it's been in the last 3 or even 6 months. On a micro level, the economy may be coming back. There's been a ton of free money, and when you dump, say, 5 trillion, $6 trillion in spending and liquidity into the economy, no doubt you're going to kind of see some of the positive upticks that we're seeing. And of course, everybody kind of coming back to work. On a micro level, you're still seeing the same thing. It's still very much across many industries, across different types of customers, size of customers. Revenue continues to be somewhat flat, right? Relatively speaking, somewhat flat. But the flip side is the cash collections on that revenue. That continues to get prolonged. 2-3 months more than what that company or that industry is typically would typically experience. So you're seeing customers and companies getting squeezed on the revenue side, specifically on the cash, and something to think about and to keep an eye on, because this stuff, like, it pops really quickly before you know it. It's on the cost of goods sold side.
Yeah, I think kind of some of the high level, even if the revenue is staying flat, Dan, we're seeing that companies, they've gotten a little comfortable with free money, right? Either on the people side or on the inventory side, the working capital side. They haven't had to have as stringent of management of tight, just-in-time manufacturing, all of that. So we're seeing some companies that are finding themselves in a difficult situation currently because they haven't really managed their working capital or their people costs in line with what they would have outside of, let's say the free money that's coming in.
Right. And so the other big squeeze, right, if you kind of picture this as like a sandwich, the other side of the bread is it's your cost of goods sold, your cost of labor. Labor continues to be a hot commodity. As you see more stimulus checks, you see enhanced unemployment benefits. You're not having that true fundamental change that you would have expected in the labor market. And so your cost of labor continues to increase. There's labor scarcity, and then there's labor turnover. That's one side of the squeeze. And then the other side of the squeeze, not the other side, but on the cost of goods sold side, it's your cost of material. So if you're a manufacturer, if you're a systems integrator, an installer, your cost of materials are one, your commodity prices are up, and then there's scarcity. The lead times are increasing. Now, what does that all turn into? Well, if the revenue is still there and you're confident in that revenue, well, what ends up happening is, because of these long lead times and higher costs of material, you end up putting your orders with your vendors a lot sooner. And so that begins to increase your working capital needs. And I have actually seen in many instances, and this is going to come out in our cash flow waterfall analysis next week, is essentially all of the PPP money and EIDL money is getting sucked up into bigger AR balances, longer AP cycles, and more inventory on the balance sheet. It's not a good sign. So that is, in my mind, like 2021 is turning out to be the working capital squeeze. So that's why in the next 4 weeks, we're going to be talking about cash flow, specifically business cash flow, and why profits, right? Why profits don't always equal cash flow.
And tools, KPIs you can use to manage your business and your working capital, your cash.
And so with all that said, since people is one of our greatest assets, but two, also in many service-based companies, never mind service-based companies, right? In most companies, people are your biggest expense and your greatest asset. The timing today is kind of interesting with our friend Luke talking about PEOs, but specifically through the lens of selecting PEOs and going through that implementation process with the PEOs.
So PEOs, professional employment organization, it's a way to try to leverage others, outsource some of that HR expertise in a business. And that's not usually a core competency of small businesses. And this is a way to gather a little more of that core competency into the HR side of your business.
Yeah, no, it's analogous to like the health insurance brokers or insurance brokers. I think it's a great idea. In hindsight, I think we probably would have embraced that.
Totally would have, yeah.
Totally would have, because the amount of data gathering, I mean, we've been through the healthcare selection, we've helped customers go through healthcare selection, but man, starting with consensus, right? And then having to make those introductions to vendors. So
yeah, and what Luke is doing is True Compare PEO. He is not a PEO, he's a PEO broker, and he can talk us more about that, but and why he started True Compare PEO, but really was to help small businesses navigate that market, and it's really worth it.
It's worth it. So with all that,
cool. Let's bring Luke in.
Luke on.
Hey, Luke.
What's up, Luke?
Hanging out. Thanks for having me again.
Hanging out. Hanging out in lockdown.
That's right.
I'm still waiting for that bourbon scotch pitcher there to be full.
No, it is full. It's just full with tequila, so it's clear.
Nice.
I filled it up with the Rock's tequila, and it's not delicious just because it's the Rock. It's actually really good.
Cool.
He and Corey were just
talking about
yeah.
tequila.
Corey
Nice.
can't find any.
Too early in the morning. HR, ding, ding, ding. All right. So Luke, tell us what you've been up to.
So I decided to go out and be on my own and start my own company called True Compare PEO, your trusted PEO specialist.
Yeah, we were just giving people our quick version of what True Compare PEO broker is, and we even said that if we were to go through it again, we would not go direct. We would definitely go through not just any PEO broker. We would go through you.
Fantastic.
But tell us a little bit about what is that market? I mean, we've been we talked about PEOs in the past on the podcast, so we have to assume that people know that it is a growing I'll call it industry. It's growing year over year. I think it's been like 8 to 10%, and that's looking to happen in the next 5 years on a continued basis. So we don't kind of need to focus on that. But what motivated you to take that plunge, take that leap?
Yeah. So on that, yes, the PEO is becoming extremely mainstream now, right? Not a lot of people are like, what payroll company do I use? Now it's, what PEO do I use? And because of that growth and popularity, there are 900 PEOs in the United States. Most of them small regional players that focus on one city or one state. But with that, how do you pick the one that fits your needs best? And that's exactly why I decided to go out on my own. You guys know I've been doing the PEO sale direct for quite some time now. And I realized that there isn't one PEO that fits the needs of every company, but there is a PEO that can fit the needs of the client. So at True Compare, our goal is to simplify the PEO search process and help you evaluate top providers that best suit your individualized needs, providing transparency and trusted expertise every step of the way through our True Comparison. We have partnered with 11 of the top professional employer organizations in the country, and we work directly with our client to uncover what their needs are and show them floor to ceiling everything that the PEO offers, and we break out everything so they can make the best decision for their company.
So I'd like to explore both sides of that, because from one perspective, it's the customer persona and sort of putting them into 2 or 3 buckets. But on the flip side is, what does differentiate these? So you're working with 11 PEOs. What differentiates the PEOs?
So the way that we present them and break them out is we have our bucket of publicly traded, been doing it a long time, right? They're publicly traded, they're massive companies, they have the most resources, and they're full service. These PEOs want to be in your business. They want to have business development meetings. They want to help direct which way and give advice that way, right? They want to be real hands-on. Then you have the middle bucket, the supporters, the big privately owned, great technology platforms, great support. These are going to be the PEOs that you just need to call when you need help. They're not going to be so much putting a human being into your business, but they're there when you need them. They're constantly updating you and working alongside you as a partner, not just a vendor. Then you have the third bucket. It's the Sas Peo Hybrid. Now, with the Sas Peo Hybrid model, you're going to get a very low cost fee because there's not a lot of support there. But if you're running a very lean company and you just need a great platform and great benefits, those can be great choices for you as well. So that's how we break out our partners.
Can you for context, can you give people some examples of who's in some of the players in those each of those buckets?
Sure. So in the top bucket, you're going to have Insperity, ADP, Paychex, and Oasis. Everybody knows who they are. Insperity is one of the first PEOs ever. ADP is ADP. When we put our differentiators at the bottom, that's literally what I say under ADP. It's ADP. And then you have Paychex and Oasis, which I really like Paychex and Oasis. Paychex acquired Oasis back in 2018, and they are still separate. So they can show you both to see which model fits you best. Then when you get into the middle, you have your Venture of the world, which Venture is very cool right now. VC backed, growing quickly. Your CoAdvantage, Engage, Extensis, and Prestige. Great companies, all do things a little different, all focus on kind of different industries where they work best. And then you have in the third bucket, JustWorks, fantastic company. CEO is super intelligent, big fan. And then you have Rippling. Rippling has a big name in the payroll world. They just recently jumped into the PEO and they're taking a very heavy tech focus to it. Lots of integration, very app focused, very cool.
And then in the third bucket, it's more smaller regional players.
Right. So I've spoken to a couple regional players. We may be looking at them as well for when we have clients that are in their area, because in some of those rural areas like Chicago or Colorado, they like that hometown feel and that more family oriented business. So we want to make sure that we give them their shot as well.
Got it. And in terms of pricing, are the players in sort of bucket A versus bucket B? I mean, are you going to see difference in pricing, difference in health insurance plans? I mean, because that is probably one of the biggest benefits of a PEO, right? Is that group health insurance?
Yeah. So 75% of employers are going to the PEO for the medical insurance. It's a known fact. That's the best way for a small business to be able to compete with larger Fortune 1000 companies. It's just how you do it. So in the bucket A, yeah, they're going to be a little bit more costly, but you're going to get a lot more hand-holding, a lot more interaction, a lot more support. And then in bucket B, for the support and the technology, it's going to, let's go back. The first bucket, you're going to see a lot of percentage of payroll, right? They put a percentage on your payroll and they pitch it as you grow, we grow. And a lot of CFOs like that as well, because they work off of percentages and that's how they run their business. Great. When you get into the second bucket, they're going to do more of a per employee per month. So to be more flat line, broken out, transparent there for you. And the same with the third bucket with the Sas Peo hybrids. But their cost is going to be half of what everybody else's is because you're giving away some of that support. Right. On the medical, it all depends on the underwriting. And that's an important piece. We gather all of the necessary information up front, and I mean all of it. I'm probably going to gather more than others because I want to make sure that you're getting underwritten correctly the first time. You can try to squeeze things through. Great. First year, you got great rates, but if something comes up later on and you get a 20% increase, who are you going to be upset with? I'm not in business to have people upset with me.
Right. So Steve has a question around your value proposition and what you what you do versus going directly, but I want to explore a little bit more of like this left side, right side equation, right? So you've talked about the vendors that are out there. Now, can you help me? So we work with a lot of companies, small, big, startups, restructuring, pre-revenue, lots of revenue. Can you kind of bucket our customers, the market, into maybe three personas and how that sort of fits into these the vendor segments?
Sure. So let's start with the startup. You got a couple founders, you're going to get money so that you can grow. You're a great fit for PEO because once you get that seed funding and you're ready to grow, the infrastructure is there for you to do it. And you don't have an HR team, you're wearing a bunch of hats. The PEO can be your HR team. And you'll see a lot more now that venture capitalists are now asking these startups, who's supporting you?
Right. Right.
How are you taking care of your employees? What's your infrastructure look like? Because it's important to them because it can make or break a company. Then you get to the companies that are growing fast, but they have an HR department. Great. We want you to keep those people. Those human beings are essential to your success. But 2020 has shown us that the world is ever changing, right? So if you had all of your employees in California, now you're remote, now you're in 8 different states, it's probably going to take your HR team some time to research and get you integrated into the compliance of those states, right? Or you can join a PEO and they can have your back and make sure that they're educating you, keeping you up to date, and supporting you in this transition. Also, let's say, look at the mass migration from California to Florida. What if you had a bunch of California plans that you're offering your California employees and now you move to Florida? Are those networks going to integrate?
Yeah, we've had that experience here. We've had employees move to Maryland, Berlin, Vermont, Denver.
So it's something that the PEO does very well. A lot of my partners have regional plans as well, so not just national. So when your employees move and they update it in the system's automatically going to let the employee know, hey, you're in a different region. We might want to take this was a life status change. Let's make sure the health insurance that you're enrolled in is going to work for where you are now.
Right.
And then you have your large, your 500-man companies. PEO can still be a great fit. Just because you have a ton of employees doesn't mean that it couldn't be a benefit to offset some of that risk and take away some of that administrative burden.
Yeah. And at that point, you probably have more benefits, more people, more of your census participating in the health insurance. And therefore, if you can capture that economic benefit, it's going to continue to be advantageous to you up to a certain point.
And more risk, right?
Do you see a cap kind of at number of employees at which people start to migrate away from the PEO?
It's really when you're ready to take it all in-house. When you're ready to do, I would say 500 would be around that point. But I've had clients that have grown all the way to 2,000 and then call me and be like, hey, we got to come off the PEO. And I'm like, wait, where are you going? They're like, well, we just got acquired by Amazon for $1.8 billion, so we don't need you anymore. It all really depends on how you're running your business and where you want the support and if you want it or not, and if the expense is worth it anymore.
Yeah, no, one thing you said was, especially for venture-backed companies, you're seeing that the VCs are asking, who's your support? And I mean, we've seen that in other areas as well, especially like cap table management, Shoebox. VCs are asking for, are you on Shoebox or are you on Carta? Because I'm going to expect that, and if you're not, I'm going to require it. Just like they used to be, convert to a C corp before I put the money in, because I know what to expect, right? I think the same thing here. Like they know what to expect with PEOs, right? They don't know what to expect when the founder is the one that manages the HR department, right?
Right.
Yeah, and some VCs have their PEOs that they want you to be on, which is great. Go with those. They're comfortable with them. But we're seeing a lot of VCs are like, well, I got to kind of manage this. I introduce them and then they kind of want me to be involved in it.
Yeah.
I want to do that. That's where we come in. Cool.
Yeah. And I know just to kind of get into your process a little bit, we've kind of talked about what True Compare PEO does, but talk us through your process and how how do you engage with customers?
So it starts with a personal needs assessment. This is where we sit and we either, if you don't know what PEO is, great. We want to educate you on what it is. If you already know and you're on a PEO and maybe you're unhappy with them and you want to see your other options, great. We're going to educate you on all those. It's important for our clients and it's really important for us to make them comfortable knowing that we're just here to help. I'm not here to slam you through the process. That's not advantageous for us. Selecting a PEO is a big decision for companies and it takes time to make the right decision. So we make sure to let our client know, listen, I'm not in a hurry. I'm on your timeline. I work for you. Let's take our time to make sure we make the right decision. Then we go to data collection. There's a lot of data that we need. You guys know that just as well as I do. We got to get the census, the employee census. We got to get the dependent census. We got to get all of the payroll docs. So I walk my client step by step, line itemed out, and I explain why we need it. And instead of gathering, 7 different PEO documents, I've worked with my partners and created my own that we can fill out one and I can give it to 7. So we don't have to do all the back and forth. And we make sure that we gather it all up front because I want the quotes to be right. I don't want to bring, okay, here's contingent pricing. Let's talk. There's more back and forth. I want to bring you the real quotes the first time so we can work through them.
So that's the selection process, right?
So once I gather all the quotes from my partners, I put it in our presentation, nice side by side, about 120 lines to go through to make sure that we're breaking it all out. And I'll give you one example of the line items is the state unemployment rate. And we'll use New York as an example. New York's unemployment rate can vary from 1% to 9%. If you're a new company, it's 4%. Let's say you have really great unemployment and you're at 1% and you go with a PEO that has a 6% and they don't tell you about it. You just went up 5% on the taxes. You're probably going to be a little upset about that.
Yeah.
So that's just one example of the things that we make sure to break out and explain, hey, this is going to change.
Yep.
And they're required to tell you that, right?
Who?
The PEO.
Yeah, it's in the proposal somewhere.
It's somewhere.
Listen, I was a sales rep at a big PEO firm. Sometimes things slip through the cracks, right? And we're here and pride ourselves on our true comparison to make sure that nothing does.
Good.
Because we're not interested in moving a company to PEO to PEO to PEO every year.
What about the health insurance piece? That must be difficult to distill down because, I mean, even going through a health insurance broker, that feels overwhelming. If I had to look at 6 plans over 3 PEOs trying to make heads or tails of this, like.
Well, it's a good thing that I went and got my health insurance license so I could legally talk about it. So you'll see that a lot in not all, but some PEO sales reps are not health insurance. They're not legal health insurance reps. I am. And I didn't have to do it. I wanted to do it so that I could speak towards the health insurance. And it all comes down to the needs. If you're on a high deductible plan, if you have one high deductible plan, who's that working for? Right? Your deductible is $5,500. That might work really well for the young folks that don't use the health insurance plan because it's real low cost. What about the older folks that need to use it and have 4 kids and got to meet that $5,500 deductible every year? So is one plan good, or do we need to have 3, a low, medium, and high? We want to make sure that we're giving our employees enough choice that we're covering everybody and all of their needs.
Yeah, so that's just another thing that that Luke, you've educated me on to some extent, is that there's kind of 2 aspects to this. One, that what you're bringing across, Dan, is once you select a PEO, you got to identify what plans you want to enroll in, and that's whether you go straight yourself or through a PEO. Another piece is how PEOs treat your individual company census, right, Luke?
Yep.
And whether they pull you into their broader pool or they keep you as your own piece of underwriting. And can you talk to that a little bit about how PEOs handle that?
So I can't get into too much detail on their underwriting process because it's their underwriting process. But they do, all of them underwrite each company individually to make sure. They have to look at your data to make sure that you're a good fit for them. Some do, like, you are your company and you are in control of your rates. You either use it a lot and you get a big increase, you use it a little and you stay the same. Others do put you in the big pool and they manage that pool, but they'll have separate pools, right? They're not going to just put everybody in there. They can have 3 or 4 or 5 different pools that they put different risk rates into to spread the risk across. The PEO is built to help maintain low renewals in single digits. And we'll use the Tri-State as an example. It's community rated. The rates are pretty much the rates, and you have no control of what the increase is going to be. Last year, I think the open market rate was close to 18% in New York.
Yeah,
for a small business, that's a pretty big increase. Through the PEO using their pool, the way that they underwrite, I have a couple that can show that they've been a 4% increase year over year for all of their clients. That's a long conversation, so we can always dive deeper into that later on.
But I found like, so I've been through this a few times, not just with us, with the other customers. It is daunting because the presentment of the key points of data that you need to make decisions are just like all over the place.
Mhm.
It's like apples and oranges. And so one of the things that got me excited when Luke called me probably 2 months ago, says, "Hey, I'm thinking of doing this. What are your thoughts?" And I was like, "Money, done. This is like a total no-brainer." I mean, we're pretty smart guys, and we just don't have the expertise, the time to distill the information. Now, that's sort of the selection process, right, Luke? Now, talk us through, because the other pain point, of course, is when you do sign on that dotted line and you go through the implementation and then the post-implementation, which is the reconciliation of the outcome, right? Of the outcome of the implementation. Am I in the same place? Did everything convert correctly? The 401k, the health insurance, the, whatever it may be. Because that is a lot for a small management team to go through. Now, it's one thing if it's de novo, a startup, like you're starting from scratch, you got nada, right? It's one thing when you got a bike in motion. Talk to me about how you help with that process.
So we can just take that back to communication. It has to be communicated properly. That's why we take our time with our clients to break all of that out. I'm going to have a complete timeline for your implementation before you even sign on the dotted line. I'm going to make sure you understand every step of the implementation and how it works, from signing the documents to enrolling the employees to the I-9 verification to, hey, listen, we're switching 401ks. What does that look like? Switching your 401k can take time as well. I am in no interest in saying, okay, great, you picked that PEO. Good luck. Yeah. Absolutely not. Each of my clients is attaching me to that account. I'm an advocate for the client. I'm there. I'm with them. I'm making sure that we're holding the PEO accountable for what they said before you signed on that dotted line. I'm always going to be the client's emergency contact to make sure that their needs are being taken care of, because each one of my partners know I have 11 other companies ready and willing to take that business if it's not taken care of properly.
Cool. So just to break down the barrier for people that are listening, right? How do you get compensated? Because if you go to a healthcare broker, right? Nobody's worried about calling up the healthcare broker because they know they're not going to pay a cent more or a cent less. It's about service, right? I've had great healthcare brokers and I've had really crappy ones. And if I were to go select, I'd always go back to the one that is built on service, right? Because I know that they're both going to get compensated the same way.
So we have the same business model as the traditional health insurance broker, where I have no fee to the client. I work for the client, the PEO works for me, and the PEO is contingency on you picking one of my partners. If you choose one of my partners, I get a percentage of that. And people are like, well, then they got to build your compensation in there. Well, if you think about it, They don't pay my workers' comp. They don't pay my taxes. They don't pay my overhead. They don't pay my SaaS products. They don't pay GrowthLab, all that money. I'm much cheaper.
Yeah, no, I like the model, and the reason I bring that up is to break down the barrier, right? Because small businesses especially think they need to be the master of their own domain in order to like get the best fees, right? Our conversation over the last few months has been, that's really not the case. Because you are going to ask a lot more questions, better questions up front, and B, you've got the relationships, you've got the discounts that you can kind of build into, what they're, where they're willing to like cut into their fees.
Yeah. It's like anything else. Why do we go to Costco? We go there to buy wholesale. I know where it needs to be, it obviously needs to be profitable for the PEO, but it needs to fit the bottom line of the company as well. They know that. Right. That's why they give their sales reps the ability to discount. Right. We want to find a place where it works for everyone. The bottom line of the company is extremely important, because if you go out of business, guess what? That hurts the PEO.
Yeah. So I got one last question for Luke. You made a comment. You could be your own HR team and still go with a PEO. I had this perception months ago that the benefit of the PEO was the HR component of it. As a small business owner, I don't think I'm really going to make out much more by buying health insurance the way I buy it today versus through the PEO. And maybe a few other things. You gave an example of unemployment rates, and I always thought that the benefit of the PEO was that HR component. Are you suggesting like not all PEOs come with that HR component? And that's one. And then two, what are my expectations as a business owner for an HR team?
So they're all different. Some do. Some are going to give you that in-house, want to be in your business, hold your hand through everything, always be there. Others are going to give you a 1-800 number to call, and you're going to get a specialist that picks up. It all depends. And that's what we have to uncover to find. Your expectations weren't low. Your expectations were uninformed. We got to find the one. We got to meet with them. A lot of times when I meet with clients that are really service heavy, I'll work with a partner and be like, hey, I need you to bring their HR rep to the meeting so they can meet them, their actual HR rep to the meeting so that we can talk to them and see how the synergies are and see if this is going to work. It's all about communication and figuring out what's going to be the best needs. And they're all different.
Yeah, no, I'm a believer. I think there's value in the PEO, especially for service-based businesses, especially for those businesses where the people are truly the asset of your company.
I think the trend does not surprise me. We are outsourced accounting and finance. PEOs are outsourced payroll and benefits and HR. On the IT side, we've been preaching since the pandemic, like we saw people not being able to deal with business operations because they were not able to use cloud-based resources, right? So whether it's IT, finance, HR, we're seeing more small businesses outsource those non-core functions and really retaining what they can do, they can do best. So I'm not surprised with the trend, and I'm pumped that you're taking your experience and bringing it to the market to help people.
Very cool.
Navigate. It's great.
Yeah, totally. Congratulations.
Thank you. And on that, that's what we came to do, right? We put apples in our logo for two reasons. One, apples to apples comparison. The other is apples have historically been a symbol of education. And that's what I'm all about. I want to, for people who don't know what PEO is, I want to educate it on you, whether it is a good fit or not. And I want to educate individuals on all of their other options that they may not know. I am happy to work with a client and say, listen, PEO is not for you. It's not a bad thing. We educated this client on, hey, you don't have to worry about this. You're running a great company. You don't need this. So that was the main core behind this. I just wanted to help small, medium-sized businesses succeed. And if I can, great. And if I can't, great.
Cool. No, I appreciate it, Luke. Awesome.
So True Compare
Any-
PEO.
Yeah, True Compare.
Where do they find you if they want to look you up?
So you can go to our website, truecomparePEO.com. You can follow me on LinkedIn or go to GrowthLab Financial Partners.
That's right.
Your landing page will be up soon, is my understanding. If it's
No,
not,
it's up. It's looking good. Your team did a fantastic job, man. I can't thank you guys enough. You guys are doing a great job, and thank you.
thanks, buddy. Appreciate it.
Talk to you soon.
Luke, take care, Luke.
Cool.
Great guy. I think it's a great business model.
He's got heart to do that, to serve small businesses.
Yeah, and he knows his stuff too, right? He knows his stuff. He understands the pain points, because comparing PEOs that, especially if you've never gone through this, if choosing your annual health insurance renewal plan, that process gives you heartburn, choosing PEOs, selecting PEOs is going to like 10x that heartburn. So with that said, I'm looking forward to next week, Steve, as we go into March and coming out of winter. There's still quite a bit of, there's definitely a minefield out there. The good news is this PPP2 definitely will help many customers, many companies. But I think it's back to basics, focusing on cash flow, focusing on what works, modifying strategy around revenue, collections, contracts, whether it's increasing frequency, ramping up proactive customer collections, focusing on inventory management. The whole cash conversion cycle is really going to be, I think it was almost more important than I thought. I didn't realize, I think a lot of, I think small businesses have been a little complacent.
Like a little lackadaisical in the cash management.
Cool. All right, my friend. That was good. Appreciate it. Nice job. Cool. Thanks, everyone.
Okay, so that's a wrap, Steve. Cool. Join us next week. Check us out at growthlabfinancial.com or text raw take to 833-759-0277.